here's the wedge. You can see it. It kind of just looks like a wedge with the downward sloping upper line, and then also a downward sloping lower trend line. So it kind of looks like a paper airplane or just a wedge. Doorstop, it's another thing. So with the wedges, you need a prior downtrend for a falling wedge. Falling wedges are bullish, whereas rising wedges are bearish. With the falling wedge, you're going to need a previous downtrend. So
they're bullish and bearish despite them appearing as though they're going in the direction opposite of what they're describing.
Yes,
because the resulting rise or fall is the opposite of where the wedge is going.
Yeah.
Okay.
Yeah, exactly.
Just making sure.
Yeah. So with the falling wedges, we'll be in a downtrend, and then you'll start to see this sloping down line and also this sloping down line as well. So as you can see, it forms somewhat of a wedge, and price has to react to one direction after it gets to this point, converging point here. It has to respond either up or down. They typically break up. I want to say it's a 75 to 80% chance that these things work. About a 25% chance that they fail, and it ends up in a breakout. So falling wedges.
To what extent against the downward trend does it have to go before you're like, okay, it's done testing, it's about to go?
Usually 2 or 3 tests of the downward trend line. One touch here, 2 touches, 3 touches. Typically, it could be more, it could be less, but probably at least 2. But you want at least 3. 3 is like the
so 2 times where it went up, down a little, and then back up.
Yeah, so 2 or 3 points off of this downward line that you draw.
Okay.
So same thing with here. You see, we would have hit like once, maybe twice, 3, possibly 4 times before breaking down. With this one, we would have hit once, twice, 3 times before breaking up.
Okay.
Yeah.
So 2 or 3 of those before it goes up.
Yeah, and then you also want to wait for it to actually break out of this before you'd enter. You can enter these on.
You just don't know when to predict it.
Yeah. So if you tried to get in right here, it's like you're gonna have the highest returns, but you're also gonna have maximum risk because it could potentially have another leg down. It could potentially not break out yet. You don't really know until it breaks out. So the safest place to buy on these wedges is going to be right here. So notice how it goes up. Here, let me change the color. Goes up, breaks out of it, comes back down, and then goes up. Is that hard to see? I know that green's a little bit.
Yeah, there we go. I turned my screen, so now it's easier.
Here, let me use yellow, see if that's a little bit. So it goes up, goes back down, and goes up again. So the best time to buy this is going to be on this break right here after the retests. And then you would set your stops like right here, which would form a nice little box. So entry would be here above after the retest and above this first little impulsive wave after the retest. And then you set your stops below the retest. And that's basically telling you you're only risking this amount of money. So you're saying if it breaks below here, I'm okay losing 10, 20 bucks, 10, 20%, whatever. But if it breaks out, then you're gonna get this whole impulsive move out here.
Okay.
Yeah. So those are the wedges. The wedges, they're pretty easy to see. I would say they're one of the easier ones to identify just because it's an obvious downtrend, usually at either the bottom
pretty drastic
or the
movement,
top.
so
What was that?
I was about to say it's pretty drastic movement.
Yeah, exactly. Um, so yeah, these are one of my favorite patterns to look at, especially the falling wedge, but the rising wedge as well. So the main things to go over with this one is you're going to need a prior trend. Since the wedges are reversal patterns, that means that they happen at the bottom of downtrends or the top of uptrends typically. So like you were saying before, it's the opposite of the way it's moving. So if it's going down, then it should break out upwards. If it's going up, it should break downwards. Like you were saying before. So both the lines are going to be slanted. The upper trend line and the lower trend line is going to be slanted. For the falling wedge, they're both going to be slanted in a downward direction, whereas the rising wedge, they're both going to be upwardly slanted in the same direction. Contraction, it's basically just saying that whenever they get to the end point, the converging line, it's going to have to break in either way. So what was it?
Oh, nothing.
Okay. So as they start to converge, it's going to have to break out in either way. And typically, before the breakout, you're going to see smaller bars, like right here. So this would have been the last bounce, and you'll typically see like some smaller bars pick up before at the bottom of the downtrends. Like it's not typically you're not going to see a huge, big, fat red bar and then a reversal. You're going to see little bars, maybe some green bars in it, maybe one big red bar, but then notice how the bars are getting smaller here.
Yeah.
Like as we go down, like this is a pretty big bar, decently bigger bar. Then these ones are like super small, like tiny, tiny, tiny. And then they start to go. So typically at the bottom, that's another thing you can look for to tell you that a trend is maybe stopping or losing steam. The bars are going to get smaller and
More things.
yeah, they're going to be more like clumped up. It's not going to be a huge bars, anything like that. So you need the resistance break. Resistance is just this trend line. For it to actually be confirmed, you need to break this resistance line. Best entry is going to be after the retest and above the this first little move here. After the retest, after it breaks the new high here, after it retests the trend line, that's going to be your best possible entry, your safest. That's your highest probability entry. Let's put it like that. It may not be the best one. You could make more money doing something else, but this one's going to give you the highest chance to make money every single time. And that's really what I'm about. I'm not really, I'm not trying to hit 1,000% every time, 100% every time. I'd rather take those like 20, 30, 50% chances, but where I have an 80 to 90% chance to make 50% or like whatever. Volume, you're going to want to see decreasing volume within the funnel. So decreasing volume throughout this period of time, and then an increase in volume on the breakout right here. So decreasing volume as we're rising, then increase in volume right here.
And by volume, are you just referring to like the overall length of the candle?
No, so volume's going to be this down here, and you see these little green and red bars?
Yes.
So that's basically telling you how much money is being run through this specific asset. So a green bar is telling you all the contracts that are bought and sold. The reason that it's green means that there were more buying done in that period of time than selling. But it tells you the overall volume. So this would be an example of a bullish rectangle. You see the previous uptrend, same pattern here, but again, an uptrend. It's bouncing off this bottom resistant or bottom support. So you could buy down here. At any point, you could buy down here, set your stops a little bit below, just making a bet that it's not going to go below here. And then you could sell it up here and then leave a little bit just in case we have a larger move up. Just in case we have another move that'll move a little bit higher.